Ghabour is with us, owner, Key Advisors Wealth Management. All right, so now what? I mean, we're hearing again from Kevin McCarthy. I mean, he seems optimistic. President Biden also has noted that they are not planning a default. I mean, that gave some optimism to the market. Is it enough?
Well, look, I don't think there's any doubt that if they do come up with an agreement next week, early next week, as the president was hopeful for yesterday in his announcement, that'll probably put more fuel to the fire of this rally we've seen here. I'm a little bit less optimistic only because traditionally D.C. doesn't do anything 2 weeks in advance of a deadline. Obviously, it would calm a lot of nerves if they did it. My concern is if they do put this up for a vote next week and they vote against it, and then we're looking at being a week away from the potential deadline. Now, I don't think we'll have a technical default, so I know some people are worried about that. I'm not worried about that. Ultimately, they'll find ways to pay their bills, and if they're telling us June 1st is the deadline, it's probably later than that. But look, I don't think there's any doubt. You're going to see, like if you look at the market the last 3 months, it's basically been flat on the S&P. We've been range bound. And something's going to cause it to break out one way or another. And maybe this is the catalyst that does that, either to the upside or to the downside. Obviously, we're positioned more for the downside for our clients, but we obviously understand the impact of this and how important it is for the market.
How worried are we about a recessionary environment?
We're very concerned about it. I mean, I think from a data perspective, no one can doubt the fact that, or dispute the fact that this economy is slowing down. One thing that's definitely holding up is the job market, right? The labor market has been very strong, but that's inflationary as well, too, which causes concern for the Fed. Are they going to raise again in June? So you got this tug of war happening right now. And it's interesting seeing this move in the bond market the last 5 to 6 days. You're seeing rates really rip to levels we haven't seen in a while. The dollar has gotten stronger. So it's kind of giving, again, more mixed signals in regards to the bond market, thinking that potentially there's maybe another rate hike because of this labor market staying sticky. But the consumer is definitely getting weaker. You can tell from the retail numbers that come out with the warnings that they've given us. When you look at their inventory numbers, they are very high. But there's no doubt this economy has absolutely been resilient, more resilient than even I thought it would be. But I believe we will have a recession, and I think it is starting here in the second quarter.
And we're seeing gold, which often is the safe haven. Of course, it was well above 2,000. In fact, gold has had the worst week this week since February. I see it right now at 1960 a troy ounce. And you saw this as an opportunity, right?
We did. We actually added to gold today. We bought some towards the end of last week as well, too. So we've been dollar cost averaging throughout this dip, because I do think ultimately the flight to safety is going to be one of the better places to be as we go into the teeth of this potential recession. And again, this debt ceiling debate. And look, when they do sign this debt deal, now we have to figure out what's going to happen when the Treasury has to replenish the general account that they have been depleting, right? That could take liquidity out of the system and cause more volatility, both on the bond and stock market side. And we think gold has a potential place to be a winner in that type of environment.
So at this point, I know you're playing it cautiously, even concerned about recession environment. Are you buying anything? Are you advising clients to do anything here?
We've been very active on trading long-term treasuries. They've been just as volatile as some of the equity sectors, as well as some of these metals that we have just shared with you in regards to what we've done on the equity side. We have very little exposure to both healthcare and consumer staples. We're really trying to be a little bit picky here on when we're going to get into this market. Small caps is an area that we want to be buying first, because traditionally when you start a new bull market, small caps have generally lead the way. Some people think the bull market's already started. I disagree with that. That's our opinion. We'll have to wait and see if we're right. But small caps is an area we want to be aggressive buyers in when we feel like we are closer to a bottom.
Look, and small caps have had a tough time of it, right? I mean, over the last 6 months, down about, well, not terrible time, but have underperformed. This last 6 months, down 6%. But really, over the last 10 years, where small caps been, right?
Yeah, and look, you look at the Russell 2000, that's 2,000 domestic companies. To me, when you look at that, that kind of gives you a true picture in regards to how strong or weak the economy actually is. And when you look at the small cap sector, it's telling you that there is some troubling times economically ahead of us. And you can see that when you talk to small business owners. And look, let's also not forget about the fact that we do have a handful of mega cap companies that really are carrying the weight on this market, where we are very heavily weighted in one area. So when you look under the hood, in our opinion, it's not as strong as maybe the S&P or NASDAQ may lead us to believe. Again, that's our thesis on how things are and how we're interpreting the message that we're getting from these small companies and small businesses that we talk to.
How come you're not jumping on the bandwagon of AI or whatever else?
Well, look, I don't get FOMO, and right now, there's no doubt. It seems like if you say the word AI in front of something, it's going to go up. And look, there's no doubt long-term AI is going to be the place that you want to be. We had talks about that years ago when we were talking about companies like Google. And there will be a time that we get into that space, but we just need to feel more comfortable with where we are in the economic cycle. And we just don't think that the worst is behind us yet. And if we are correct, then we will get much better entry points than where the prices are today. And that's what we're banking on for our clients.
Eddie Ghabour, great to see you. Thank you.
Thank you. Have a good day.
TD Advisors Wealth Management. Thanks, Eddie.